Yo, what's good? Welcome back to Fulfillment Key. I know it's been a while, but today we're gonna go over um, some growth stocks and a growth portfolio and how we were able to secure 10% in a month without using any options, without using any calls, puts, none of that. It's just simply stocks. And this video was filmed as of January 8th, so that's probably when it'll go up. And if it doesn't, then for the data to be relevant. So the first thing I want to get into is this new growth portfolio we started. So as many of you guys know, we started a test portfolio, which we were kind of throwing in $800 a month just to see what happens. And as of right now, the value of that portfolio is displayed on screen. And these are the securities and stocks that we have purchased, up until this point that this video is filmed. And I'm sure you're familiar with a lot of these companies like Netflix, Tesla, and QQQ. Some people may not know exactly what that is. It's basically an ETF that tracks a bunch of tech securities and stocks. And it's actually had a really good performance over the last year, about like 110%. And if you guys have watched the last closed-end fund video, then you guys will know that it's very hard to come by those returns with safer securities such as bonds on fixed income assets, because they're securing you that dividend, the juicy nice dividend. But as you can see here, we're up the most on Tesla. And I have something that I want to say more later about Tesla, if you guys watch till the end. But as you can see, Netflix, American Airlines, Mastercard, Square, a lot of these companies are basically ripe with innovation. And the one I like the most out of all of these is Square. But you got to ask yourself when you're buying these kind of tech securities and stocks, like, why am I buying them? And you have to look for the ones that are innovative. Like, for example, Uber is coming out with new technologies. The self-driving, when it comes out, could be applied onto Uber as far as like driving people around in 10 to 20 years from now. So that's why we're holding Uber. Amazon, they've taken over the world with packages. Beyond Meat is innovating the way that vegetarians have meat, and DocuSign has totally changed the way people sign contracts. A lot of them are not even in person when people do signings and signing events and stuff like that. It's all online, and when people sign NDAs, employment agreements, and things like that. But that is all that's on the portfolio. And like I always say, the key to getting wealthy is to always get started, to grind, invest, and repeat, and just set aside money every month to invest. And people generally overestimate what they can do in 5 years and underestimate what they can do in 10 years. And now I'm going to go over a play that I'm doing. As always, I'm not a licensed financial professional by any means. I've been in finance for a while, but I always say to do your own research. Take what I'm saying, use it because a lot of it is very reasonable, and then do your own research with it. So if you guys can see here, we have the TradingView technicals, which are telling us that American Airlines is a sell. Whereas, sometimes these technicals can be off. They can be right or wrong, which you guys will see in this slide and the next. And, I would look at the stock and the company's balance sheet more than I would look at the technicals, because that tells a lot more of the story, because technicals only track the price action, which is a part of the part of the pie, but it's not the whole picture. So like I'm saying here, there's a 50% upside on AAL. And if you guys want to take the risk, it's about a medium risk play. You could turn, let's say you had 10 grand to 15 grand, and if you had 100 grand into 150 grand. And the current price is reflected and priced in of the COVID whole situation. We may see more, like either the price going up or down based on what happens in the next about 6 months, and if airlines continue getting bailed out by the government. But we'll see. That's why I say it's a medium risk play. But if you guys got balls, go for it. And this is the most interesting one. This is what everyone's been raving about for weeks and weeks, about how Tesla is going to take over the world. And I mean, they've been saying that for 2-3 years, but especially Cathie Wood from ARK Invest. If you guys know who that is, she's been saying a lot about Tesla and how it's one of the most innovative companies in the world. I believe it, but I beg to differ that the price really reflects, what the company's doing. I do think it's an innovative company. I do think that, it'll change the way that, we think about transportation. Electric vehicles will change the way we emit like all that gross shit that comes out of like gasoline cars into the environment. But I definitely think the price and the valuation is insane. But the technicals, again, like I said, you look at both sides. The balance sheet is great in the company. They're actually delivering vehicles. They're selling vehicles, and the technicals are saying a good story. However, if you guys remember Michael Burry from Big Short, you're gonna love reading this article, which I'll link in the description. But it talks about how he thinks that Tesla's gonna crash, similar to the housing bubble, and similar to how, if you guys have watched the movie The Big Short, you would know how he shorted. I forget what it was, but he shorted something and made like $100 million, and they made $750 million for his clients. And I like the way this guy thinks, so I've taken what he said into consideration. So I do want you guys to understand the risk of Tesla at these levels. I'm not saying it's a bad company. I'm just saying that at $880 a share, especially when the stock is already split from being worth so much and then going back up to that same point, it's hard to say if, like, it's a good play right now. But one thing I would advise you guys to look into is, take a look at what percentage of it is institutional investors and what percentage of it is, individual investors. And that'll give you a better idea, because generally with things that are more institutional investors, when those institutional investors pull out, they leave the individual investors holding the bag. So if it's a high level of institutional investors, then, you might want to take a look at that and be a little careful. But people would say, with closed-end funds, it's a high percentage of institutional investors, and that's different because a lot of the banks, when they have a lot of cash and people putting their money into the banking system, they take those and put them into high return fixed income securities in order to earn the yield that they pay back to you. So for example, let's say you have a percentage APY at the bank, they'll give you a percent right now, and they're making 6% on your money. Based off of debt by loaning it out to other people, or they'll buy closed-end funds, which do the same thing on a grander basis. But yeah, so understand that there hasn't been a stock like Tesla in 10 to 20 years, and watch it play out. Because if you see a 5 to 10% dip, it could be a decent idea to add more and watch it as it goes along. But keep in mind that if there's a big enough dip, that institutions will pull out, and that will cause even more of a slide, and it will just come down. Which we have seen before with other stocks, and we've seen kind of in Tesla, but not to that level yet. Excuse me. But yeah, the one thing I wanted to point out that's kind of ridiculous about Tesla is the fact that their market cap is reaching $1 trillion when they haven't produced. I mean, they've produced a lot of cars, but I necessarily don't think the company's worth $830 billion, although the market cap would say otherwise. And just to put that in perspective, it would take two of the biggest American car companies, Ford and GM, right? That's more than 8 times the market cap of both of those. And as you can see here, we have, if you guys know what Wall Street Bets is, you guys probably do, but the baby's right there, and Papa Elon's, hanging out with the baby. He's got his own bandana thing on, but, I hope this video was super helpful. I'm going to keep doing these every 2 weeks to a month, just to go for overview and show you guys what I'm doing, fully transparent, so you guys can make educated decisions on the things you buy and the things that you invest in, because it is your hard-earned money. But make sure to like and subscribe. It helps me a lot. Remember to always do your own research. Use what I'm saying because it's good information, but always do your own research. And like I said, subscribe, because we're trying to build the best community for investing in stocks. So with that said, that's it for today. Hope you guys have a good new year and have a good day. Peace out.